Good evening and welcome to this session of the live learning classes conducted by the Board of Studies of the Institute of Chartered Accountants of India. It's nice to be here and back with all of you on a new topic. So, okay, somebody wants to know why my Sunday session was cancelled. Okay, Ramadevi ji, just to answer you, it was because I was out of station. I was in a place called Puducherry, Pondicherry, where usually when I travel, my connectivity is pretty good. But it so happens that particular location, the connectivity was very bad, raining heavily in this part of the country. So I didn't want to take a risk. Most of you then, half the time will be spent, you'll be putting a comment, it's lagging, your voice is lagging. Anyway, no problem, nothing lost. We have not lost anything much. Today we are going to start a new topic. It's called registration of charges, which is a very interesting continuation of your debts. See, we saw debts, and so once you talk about a debt, meaning borrowing by the company, whether by way of debentures or loan, deposit, whatever, there will be a security, right? Security. That security, when it is offered, when an asset belonging to the company is offered as a security for a loan taken by the company, a charge is created. A charge is said to be created. Okay, so okay, not much. I greet all of you and I welcome you all to the class. And so today we will start on registration of charges, which is the chapter 6 of the Companies Act 2013. And it's also chapter 6 in your Board of Studies material. So I'm also keeping the material with me in case some of you specifically ask me something based on a page number of the material. I thought I will as well keep it ready. So today's topic, just to give a broad overview, firstly, we will be speaking about the meaning of charge. What is a charge? What are the types of charges? There are two types of charges, the legal points relating to them. Then we'll come to the registration of charges, which is basically the topic. Okay, what happens when a charge is registered? What happens if a charge is not registered? And how to register the charge? Okay, application for registration of charge, all that will be covered. Then finally, when the charge is satisfied, satisfaction of charge. Satisfaction means in some way the creditor says, I'm happy, I've either been paid or some other security is given or some understanding we have reached by which you are saying I will only pay so much, I release the security. Whatever happens, it is called satisfaction. That also should be informed to the ministry, the MCA or the ROC. And as usual, in case the charge is not registered, what happens? So Ramja very particular about Sahana Bhavatu. Let me not disappoint him. Sahana Bhavatu, Sahano Bhunaktu, Saha Viryankarvavahe, Tejasvinavadhitamastu, Tejasvinavadhitamastu, Ma Vidvishavahe. Om Shanti, Shanti, Shanti. Yes. Fantastic. Let's hope things go on well. Yes. This is the definition of a charge under section 2, subsection 16 of preliminary chapter. I possibly did not cover it there because I will be covering it here. So that's the contextually, it makes sense to cover the definition here. So basically, a charge is an interest or lien. Because we use the word lien, but if you are very puristic legal person, like you are knowledgeable in law, you will understand. Lien is slightly different. Lien is the right to retain possession. Whereas when I create a charge on an asset, the creditor gets much more than that right. Of course, he gets the right to sell the property in case I do not repay the loan or comply with the conditions of the loan, then he gets the right to sell the asset. Okay. So basically a charge is an interest or lien on the property. It is created on the property or assets of a company. Please note, need not be immovable property. It could be movable property also. So it is created on the property. Property is a wide term. You have movable property, you have immovable property, right? Then you have financial assets like shares, securities. They are also property. Am I correct? Debentures. These are all property. Anything that you own is a property. Whatever is there on the asset side of the balance sheet is a property. You also have intangibles. Again, if you're going by that classification, you have tangible assets, intangible assets, movable assets, immovable assets, financial assets, monetized financial assets. All these are there. So, all this when I consider, I can offer it as a security. So, a charge is created on the property or assets of a company or any of its undertakings. See, undertaking is a bundle of assets. When a mortgage is created on a land, it is a single asset on which we are creating a mortgage. Suppose I have a factory. Okay, I got a factory in Jamnagar. Now the entire factory, land, building, machinery, etc., etc. The whole thing put together, which is used for manufacturing or doing some commercial activity, is called undertaking. Please concentrate because you will find the word undertaking figuring not only here, you will find it figuring in income tax also. So everywhere where you will find that the word undertaking is used. It's not a big thing. It's simply the entire infrastructural assets, which are used for earning money, for making profit, for commercial purpose. So that entire bundle is called undertaking. So if you have a cement factory, let us say in Ratadepalligudam, that cement factory is an undertaking. So the entire land, building, quarries, am I correct? Machinery, okay, vehicles, all put together become one undertaking. So instead of offering one asset, I can create a charge on an entire undertaking. Complete cement factory. For example, if I'm going for a new cement factory, I'll go to the bank and I will tell them, boss, we are planning to go for a new cement factory. We already have 3. Now this is the 4th cement factory. We are going to, our own profit is there. See, the last 10 years or 5 years figures are there. We've steadily made profits. We're doing well, cyclical, but we are doing well. And in the long run, we have done well. Though cyclically, we keep going up and down. Industry has its up and down, but that's okay. We are good and we are capable of repaying the loan, etc. So please give us a loan. Our project cost is 400 crores. Our project cost is 400 crores. Out of our own sources, we will bring 100 crores. You have to fund me 300 crores. Something like that. Or I will bring 50 crores. You give me 350 crores. Whatever. You got to ask him. Whatever, if he's happy, he will give you. So the project is good, and if it's viable, if he thinks it's worth it, they got the money, 300 crore. They may not, single bank may not give you. A group of banks may form a syndicate. Each of them contribute 300 crore, give it to you. One banker will become lead banker, and he will monitor the repayment, etc., etc. So these are all methods of funding. See, so this is very much closely associated with finance. If you later on, when you are actually a finance manager or a CFO or general manager finance of a large company, creating a charge will become one of the things that you have to remember when you borrow. So you go to the bank. So the bank says, we will give you 350 crore or 300 crore, whatever you want. What security are you going to give me? So you will immediately say, boss, the entire undertaking, I have already bought the land. Land is registered in my name. Documents, take it. Then you keep funding, send your people, inspect. As the factory keeps coming up, as I keep building machinery, everything will be with you. I'll create a charge on the entire undertaking. So a charge may be created on the property or assets of a company or any of its undertakings, right? It is created as security for repayment of a loan. So this is the essence, where any property or undertaking of a company is offered as a security for repayment of a loan. a charge is said to be created. I'll repeat. Where any asset, property, or undertaking of a company is offered as a security for repayment of a loan, a charge is said to be created. See, I gave an example in another class. I don't know if you remember when I said, I don't have money. Can you lend me 500 rupees? So the entire class, they put together funds, say 10 rupees, 20 rupees, 50 rupees in one kerchief and gave it to me. So I got 500 rupees. And what was the security I offered? The watch, this watch. Now, so, okay, this watch is much, much more than 500 bucks. Even on a used watch, definitely it's worth 2,000 bucks. So the point I'm trying to make is asset is worth. So I give it to the 3 students whom I select. So I gave the example for debentures. So they become the debenture. But basically, the debentures are secured debentures. How? This watch has been offered as a security for the repayment of the loan. In case they do not repay 500 rupees, the 3 debenture trustees will sell the asset. They will enforce the charge. I'm using the word very carefully. When the creditor or the debenture trustees, they decide to enforce the charge, they can sell the asset. Okay? Right? Got it? Now, here comes a peculiar concept. It says, charge includes mortgage. Why do they say this? For this, a little bit you have to stretch your mind with me. Because there is one topic which is not in your syllabus, but I'm going to quickly touch upon it, help you to understand. Why charge should include a mortgage? Because there is another law, not in your syllabus, not relevant for you, but then as a future chartered accountant, if you say, I don't know this law, it may be a little funny. There is a law called Transfer of Property Act, 1872. Transfer of Property Act, very old law, still valid law. Transfer of Property Act, where you find each type of deed or instrument, by which title to goods, ownership in land or immovable property is transferred. It is governed by Transfer of Property Act, where immovable property could be land, building, any immovable property. If it's going to be transferred, sale, mortgage, so that is covered in Transfer of Property Act. There, very specifically under the Transfer of Property Act, they say mortgage does not include a charge. For reasons best known, because they define a charge separately. They say, where by act of parties or operation of law, an asset is offered. There they define the charge and separate it from a mortgage. Very specifically, they said, and it does not, and it is not a mortgage. So charge specifically excludes a mortgage. When they defined the charge there, they specifically excluded mortgage. Right? That is under the Transfer of Property Act. You don't have to bother. Because in general law, in Transfer of Property Act, people like me who know the law may get confused. You don't know the law, so you'll never get confused. I have now made you confused because I've told you that law. There is a law called Transfer of Property Act where charge specifically excludes mortgage there. Since people may get a doubt and say, hey, charge excludes mortgage. Now, is it here included or not? They're very clearly saying, for the purpose of Companies Act, for the limited purpose of Companies Act, charge includes mortgage also. The word charge, as defined in the Companies Act 2 subsection 16, includes mortgage. So once you enter company law, forget Transfer of Property Act. That is why they are saying charge includes mortgage. So some of you may want to know, no, sir, why should they say charge includes mortgage? Therefore, there it is excluded. So to clarify, they are saying, hey, here charge includes mortgage. That's all. So as far as you are concerned, mortgage is part of this chapter. If you create a mortgage, okay, what is mortgage? When immovable property is offered as security for repayment of a loan, you make a mortgage. You create a mortgage. Mortgage is a limited interest in that immovable property. See, you are lending me money against my house property. You are a housing finance company. You lend me money against my house. I borrow from you and I keep paying EMI. But you will create what is known as MOD. That is, you will create a mortgage. memorandum of deposit of title deeds, where you will register a limited mortgage. That is called it's a mortgage by deposit of title deeds. Mortgage by deposit of title deeds will be created, and that will be registered. That has to be registered. Okay, so there they cover mortgages and all that. Mortgage is basically where immovable property is offered as security for repayment of a loan. Okay, here is the question. Let's see if you can answer it. How many of you will be able to answer? When movable property is offered as a security for repayment of a loan, where there is a transfer of possession of movable property with a view to offering it as a security for repayment of a loan, what is it called? What is it called? Where a movable property is offered as a security for repayment of a loan. Offered means possession. See, movable property possession will be given. Na? I can't keep this watch and give you it as a charge. So because it's with me, na, possession should be given. Only then, what is it called? What is that called? Correct. Parthrana gives the right answer. I'm sure many of you will give. Correct. Pledge is the correct answer. Okay. Pledge is the correct answer. Pledge is also when a movable property is given, pledge, including shares. See, when the company borrows against shares, suppose the company is having shares in other companies. A Limited is having shares in other companies, investment portfolio. That is being offered as a security. Okay, it is a charge and it's a pledge. And in the DP, the company's depository participant DP account, it will be noted under lien, like that, under lien, so that they cannot sell it. The depository will not permit you to sell it till the lien is lifted. Till the lien, the creditor should give us a right to lift that lien. So pledge is the correct word. See, there is a small confusion between hypothecation and mortgage. Don't worry. For you, there is no need to worry. Hypothecation and mortgage. If you are very particular, both are same. There is no big difference between hypothecation and mortgage. But current usage, see, in those days in Roman law, there was no difference between mortgage and hypothecation. Hypotheca was actually mortgage. Okay, but now the word hypothecation is used here very specifically for motor vehicles, like that. Okay, it's hypothecation. So we don't use the word pledge because possession is not given. It's not an immovable property also. Therefore, in between, we use the word hypothecation. See, when you buy a car and you take a loan, it is a movable property. Car is a movable property. But it's not a pledge, because you're not giving the car to the guy. What is the point? You need to drive that car. You need to use that car. But there's a charge. Am I correct? You're taken a loan against the car. So that charge, that is called hypothecation. Whereas pure movable property, it's mortgage. You don't call it hypothecation. I mean, pure immovable property, mortgage. Pure movable property, where possession is handed over and you're offering it as a security, pledge. There you don't use the word hypothecation. When jewelry is given to the bank as a security, it's a pledge. The physical possession is given to the bank. Bank will control it. Okay. So that is called hypothecation. Hypothecation is also a charge. For example, if you have a fleet of lorries, your company you are owning a fleet, 50 lorries. So you are taking one loan against that from Indian Bank or from Punjab National Bank. You go to them and say, we want 50 lorries. So they say, buy. So they send a letter of comfort to the dealer. Then the bank pays them, and hypothecation. The RC book, they will note the hypothecation. In the RC book, the RC book will be given to the RTO, who will mark it hypothecation with Indian Bank, hypothecation with Punjab National Bank, whatever. They'll give it back. So you will have possession of the RC book. But if you try to sell the property, if you sell that lorry, the guy who's buying it, if he's intelligent, he will see the RC book and say, hey, lien is there, yeah, hypothecation is there for Punjab National Bank. Go repay and come, get the lien cleared, get the hypothecation cleared. Then we will give. So when a company gives a vehicle or even some machinery, it is called hypothecation. Sometimes movable machinery, they are used, hypothecation used. So it's a loose term. There is no definition. It's a loose term. We use it. But whereas mortgage is defined, and pledge is defined in the thing. Sir, please describe bailment. Hello, not for me. There is a separate topic. Special contracts are there. Not there. Somebody else will teach you completely bailment and pledge. Don't worry. At that time, you will learn everything about bailment. If I start bailment now, again, see, idea of bailment is possession of movable goods is given with a view that the goods will be used by the other person. That's called bailment. And the understanding is that the goods will be returned after the use. So if you lend your book to your friend for exam purpose, that is called bailment, where possession in movable property is given. Okay, so that the other person can use it for some purpose, with the understanding that the goods will be returned after the user, whatever the uses. So bailment, it's a bigger topic. It's a very big topic. Bailment itself is a topic. So let's not go there. Pledge is one type of bailment where possession in movable goods is given, movable property is given with a view to offering it as a security for repayment of a loan. So pledge is one category of bailment. All right? Pledge is one category of bailment. When you don't worry, if it is there in your, it is not there in your syllabus, enjoy. Don't know it, yeah. Why are you wasting your time knowing something which is not in the syllabus? Don't know it. Maybe you read it in college. No, enough. Enjoy. Don't waste your time reading stuff that is not in syllabus. See, it has been removed. So enjoy. Don't worry about it. But if you are very particular, I'm quickly describing it. Rahul Sharma, no more. You understand it quickly. When movable property, possession in movable property is given. Possession. So possession is given with a view that will be used for some purpose and will be returned after that purpose is over. It is called bailment. It is a bigger topic. I'm sure you studied it, yeah? Somewhere you might have studied it. In college, definitely you would have studied Contract Act, special contracts, indemnity, guarantee, bailment, pledge, agency. All that you would have studied. Anyway. Now, one question was asked, which is very relevant by, I think, one second. Bhumika Chauhan was asking a good question. I will answer that and proceed. When an asset is given as security for a loan and the loan is not repaid and the value of asset is more than the loan amount, then the income amount is definitely more. See, there are strict rules for it. You go to court, you are the security holder. You see, enforcing security is not very easy. You have to go to court, you have to file a suit, then get a decree, then go and sell the asset and all. It will take some time, don't worry. Unless you are a bank and that has become a non-performing asset, means they have not repaid, they have not paid the EMI or they have not serviced the interest for 2 quarters, it comes under NPA category, non-performing asset for the bank. Then the bank can go under surface, take possession of the property, sell it. So they have power under Section 13 of the Securitization and Reconstruction of Financial Assets Act. The surface E, they can do it. But like that, so there are long-winded procedures for enforcement. Point is, if you realize more than the value of the security, you are holding it in trust for the borrower. I understand? The creditor, when he realizes more than what is due to him, that remaining amount, he becomes a trustee for it. And he has to repay it back to the owner. But very rarely will the owner of the property allow the creditor to sell. So by the time he would say, go there, do something. But if the creditor sells it and he realizes more than the value of the asset, 100% he has to return it back to the owner. And if he is keeping it, he is holding it in trust. He has the same duty as a trustee. Okay, so this is the answer to your question, Bhumika ji. Suman wants to mortgage and fixed assets. When company takes loan for PPE, mortgage charge is created on fixed assets. Takes working capital loan on stocks and BDs. If you are, according to you, that's all. I will put it that way. According to you, strictly speaking, I have no issues with what you're saying, Suman. But I don't know, because hypothecation is bigger than that. Even vehicles can be hypothecated. So movable goods can be hypothecated. Hypothecation is a loose word. It can be used casually. Anywhere you can use it. Okay, now, thank you, Mr. Suman Goyal. Okay, so don't worry about too much about hypothecation and being accurate about hypothecation. It is used very casually, even by lawyers, by commercial people. They use it very loosely. Whereas mortgage is this hypothecation is wandering in the middle somewhere. And in ancient Rome, hypotheca was what we now understand as mortgage. They called it hypotheca. Okay, so let's not get confused on that. So in simple terms, where any asset of the company is given as security for a loan, whether by way of mortgage or otherwise, a charge is said to be created. Okay, where any asset of the company is given as security for a loan, any asset is given as security for, whether by way of mortgage or otherwise. This otherwise is a very wide term. Once they say otherwise, they have given mortgage as one example. Otherwise also, any method, pledge, hypothecation, you name it. Otherwise, all that is needed is the asset of the company should be given as a security for a loan. Okay. So no problem. See, okay, I have any of the tangible, intangible. Is it necessary that value of security are equal or more than the loan amount? See, again, Ms. Bhumika, you are the creditor. You want to lend money to the company. Will you not ensure that the security is more than the loan minimum? Because in case the security does not realize full value, let us say it realizes only 75%, still your loan should be repaid. Now, so usually they will expect that the value of the asset offered as security should be 1.2 or 1.3 times the loan amount. If I am giving you 4 crores, I will expect minimum 5.5 crores, minimum 5 crores. Happy if you give me 6 crores. If I take less than that, unsecured, to that extent, I become unsecured. So that is not, it is not practical. So I don't want to see, if some fool is willing to lend money on value less than the security value, less than the loan, that is his choice. There is no law which says it should be equal. But which creditor will lend? Will you lend? Common sense, you tell me. Okay. Correct. Divya Kumari gives a classic example of bailment. When you give a notebook for copying the notes, bailment. So there's a duty on the part of the bailee. There is a person to whom you have given the notebook to return it and take due care of that book. All that is there. Intangible asset also included. Please, the two operative very important words are any asset and otherwise. So mortgage is only one example. Any method by which assets of the company is given as security for repayment of a loan, charge is created. Okay. Correct. Keshav Chaudhary finally says, sir, charge means secured asset. Unsecured asset, no charge. Absolutely correct, sir. Unsecured loans, no charge. Absolutely correct, sir. The minute we are talking about charges, we are talking about secured loans. So now you see the balance sheet we are moving. See how we are moving? We saw share capital, we saw debentures, then we saw deposits unsecured, then deposits can be secured also. Now we are seeing secured loans. Got it? Unsecured loans covered in deposits. Any unsecured loan which is not exempted in the deposit list, definition of deposit we saw now, if it is not there, if it is an unsecured loan, it automatically becomes a deposit. Secured loans will be covered by a charge. So which means you might ask me, sir, as a chartered accountant, why should I know all this nonsense? You're absolutely correct in asking. When you are auditing a company, when you're seeing secured loan, you have to verify whether there is a charge, whether it has been registered under the Companies Act, whether the registration of charge is the certificate has been obtained, whether that is disclosed in the balance sheet clearly to say that so-and-so asset has been offered as security for repayment of loan, this loan like that. That is why as a chartered accountant, you should know what is what. Now, Types of charges. See, Amulya Parikh and other students, any student, kindly do not give me instructions on what to do. The way I conduct the class is the way I conduct the class. Okay? Please don't. I am not here at your command to do what you want. Definitely, I am willing to move. But there are students asking questions, I am answering. So, Amulya Parikh, this is the last time you will do this with me. Don't ever again put such a comment in my query pad. Let's move on. No. When I want to move on, I move on. Don't worry. If you Aram said, when I want to move on, I move on. Don't worry. Because that way, you see, sometimes I may tell some example, some story. You don't like it, I can't do anything about it. You want things to be at your pace? Sorry. You get your personal tutor who will come and do whatever you say. You pay him whatever money, he will do. Like a monkey, he will do what you say. I'm a teacher. You learn the way I am teaching you. Okay, sorry, this is a very old-fashioned approach, I know. Maybe I'm not like modern teachers who do whatever you want. Sorry, don't do this again. Okay, maybe you didn't know it, so you did it. Don't do it again. To all of you, I'm telling you, don't do it. It irritates. Don't do it. Sometimes a student is asking this a topic to be repeated 2 times. I'm repeating it. Why am I repeating it? Because it is not clear. So when I'm repeating it, can you not have the patience to allow me to go at my pace? Why are you in such a hurry, sir? What's going to happen, sir? Nothing will happen. Your knowledge will be there. Don't worry. I will complete the topic. Don't worry about it. I will not further not complete. Sorry to be a little fussy about it, but I hate it. See, what is your age bar? Think about it. Don't command a teacher. Don't do it again. Don't do it again. Maybe you did it out of ignorance. Not with me, not only with me. Don't do it with any teacher. Teacher, see, my guru sometimes, he'll stop the class and he'll talk about something totally unconnected. We will patiently listen to him. There's a respect we showed to our teachers in those days. See, today, for you, throwing the money, there are people who teach you by taking money. So when you throw the money, they become monkeys. You throw the money, you command them. Sorry, not me. Not me. Don't do that to me again. Sometimes I'll share practical experiences. See, you think, so if you keep on telling, go on, move on, like that, I don't like it. See, next slide was types of charges. I will come, and that too, you are keeping the board of studies material, and you are seeing what is the next topic, types of charges, why this fellow is wasting time. Okay, don't do it. I'm not a 5th standard class teacher or a college professor. I am a professional with 35 years experience who has decided to come and teach you. Take that experience from me if you can. Our institute is the only institute where you will find professionals come and teach. Other places, you had only college professors who will come and teach you, who may not be able to teach, or schools where, they are there. Here is the only place where practical man who has seen will come and teach you. So, you should never do that. Okay, so let's leave it at that. But future, don't do this. Don't give me comment on move on. See what happened? By one move on comment, you have wasted more time only. Whereas you kept quiet, I would have moved on. Okay, if you just kept my mouth shut, I would have moved on to the topic. Next topic, which is, as you rightly say, types of charges. So, we already saw what is a charge. Now there are 2 types of charges. Types of charges, fixed charge and floating charge. The name themselves, it seems to give a good idea of what is fixed charge and what is floating charge. Name fixed charge means fixed, floating charge means floating. Sometimes students will write answer like that also. They'll say, what is the difference between fixed charge and fixed floating charge? Fixed charge is a charge which is on fixed assets. Floating charge is a charge on floating assets. I have seen answer like this. No. A fixed charge is a charge on specific assets of the borrowing company. Please note, these assets are identified at the time of creation of charge. Example, I gave an immovable property. Company is having an immovable property, a building in Nariman Point, okay, or Cafe Parade. See, they got on the 9th floor, they have 500 square feet in Nariman Point. It's a clearly identified asset. So when they create they mortgage it for borrowing money, it is a fixed charge on a asset which is identified at the time of creation of charge. Okay. When the charge is created on such assets, the charge remains fixed. And the borrowing company is not permitted to sell such asset, though it may use them. See, this is the basic difference between mortgage and pledge. In a pledge, what happens now? The asset cannot be used anymore. It will get blocked. Whereas in mortgage, it is offered as a security, but you can continue to use it. Okay, which is why hypothecation comes as this in between, where it is not immovable property, so not a mortgage. It is not a pledge. It's a movable property, but it is not a pledge because you can continue to use it. That is why we say hypothecation. Whatever it is. For example, when you buy a car and you take a loan from a bank, it's a fixed charge. Now, if the company is buying a car, taking a loan from the bank, fixed charge. Now, why? Because car is identified at the time of creation, known item with the registration number, fixed charge. Okay. Keep this example very carefully. What is the example I gave? The company has bought, let us say, the company has bought a Ferrari car for the MD. So the company is paying the money, getting the car on a loan. Okay. So S Bank is funding the Ferrari. Monthly installments are to be paid. No problem. So Ferrari belongs to the company used by the MD for his personal and official use. Whatever perquisite, all that is there. Point here is charge is created on a specific car. Identified. Got it? This is a fixed charge. I can give a number of examples. Land, building, car, machinery, undertaking. So not fixed charges. Assets under fixed charge can be sold only with the permission or consent of the charge holder. In most of these cases, the charge will be registered not only under the Companies Act, but also under the Registration Act. So you will have to register it with the registrar, sub-registrar in your area and jurisdiction, so that any creditor wants to buy that, anybody wants to buy that property, they will go to the sub-registrar office or the land revenue records, and they will search for the survey number, and they will get the report, encumbrance certificate. So in case already a charge is created and mortgage is there, it will be coming in the DC, encumbrance certificate, where you are the new buyer. Now you will know there is already a charge. So you will go back to the seller and say, hey, what are you trying to do? Clear the bank loan and then come to me. Or else we might agree, by which the seller can say, look here, bank loan is there. 100%, I have already negotiated with the bank. They are giving me OTS 37 lakhs. Property worth 1 crore. You take it. You pay 37 lakhs to the bank. Give me the balance amount. Take it and go. I'll come and register. Pay the bank. First, we'll enter into an agreement. You pay the bank. Then, on the day fixed for the registration, you give me a DD for the balance. I'll come sign. I will run this side. You run that side. So, can do. Whatever that means what? Before the asset can be sold, what is happening? The bank is being paid. Bank will keep clean. Then the bank will send a letter to the sub-registrar saying we have no more dues. Then the charge will be removed. And then the property will come clean to the buyer. Okay. So a fixed charge is vacated when the money borrowed against the assets subject to fixed charge is repaid in full. So once it is repaid, the fixed charge is vacated. But friends, mere repayment is not enough. In all these cases, you have to get a note or you have to get a consent letter from the charge holder, file it under the Companies Act for satisfaction, and also go to the other registering body. For example, if it's a car, if the loan is fully repaid, then you have to get the vacation letter, letter from the clearance of hypothecation, letter from the bank, and you have to file it with the RTO, Regional Transport Operator, who will then give you, he will remove in the RC book, he will note it, lien removed, hypothecation removed. He'll cancel it and give it to you. Today, you don't have an RC book, you have a card, he will reprint it and he will say no more, no lien and all that in his record also. So next time if somebody is buying that car, they see the RC book, there will be no lien. Like that. And vacated means removed. A fixed charge is vacated means cancelled. Cancelled. Okay. When the money borrowed is there. Now, floating charge. Now, Floating charge is created on assets which are of fluctuating or changing nature, like raw material, stock in trade, debtors, etc. So, fixed floating charge is not created on a specific asset. It is created on a class of assets. Floating charge is created on a class of assets, like raw material, stock in trade. It is a class. But once the class is identified, now specifically, you can't say, hey, this item of stock belongs to me, or this item of, or this debtor. No, it will keep on changing in the ordinary course. So unlike the fixed charge, the assets offered as security by the company can be dealt with by the company in the ordinary course of business. Now, compare this with the example I gave you. Here I told charge is created on a car. Let's ignore the Ferrari car. Let us take a simpler example. Let us take, for example, Kia. Okay. So you are buying for your company, you have decided to buy a Kia Carnival. So that is the loan you are taking from the bank, and that is the charge is created, fixed charge on a identified car. Suppose you are the Kia dealer. Kia brand is there, na cars. You are the dealer. You are the company which deals in Kia cars. Think carefully now. Kia cars. So what you do, you buy, you place an order, and you get the vehicles, different models. You display them in your showroom. You keep them in your yard. Am I correct? When the buyer comes, you sell it to him. He gets it. He takes it and he goes away. Though a charge has been created on all the cars which are there in your showroom and go down. A charge is not created on a specific car. It is created on all the cars which are there. It's a stock in trade, na? All the cars. So it is fixed floating charge is created on a class of assets. I hope this example. So same car only. When I purchased a car, took a loan, fixed charge, identified car. But here it is coming under the category of stock in trade. So the charge is on all the cars which are there in my godown. At the time of taking the loan, they say this is a floating charge on the raw material, stock in trade, debtor, etc. Okay. So the right of the company to deal with the asset, the right of the company is there to deal with the asset in the ordinary course of business. So when you buy a Kia car from the company, you get it, Celto car you are buying, you get it free of charge. So the buyer of the asset will get it free of charge. Though there is a charge on all the Kia cars, right? So usually bank will give this as working capital finance, where they will give it on stock in trade and debtor, stock in trade and debtor. So at any time, if you total the stock in trade and debtor, the total value cost should be more than the realizable value of the stock in trade and the debtors should be more than the CC loan, amount of cash credit loan available by the company. Usually they'll expect that the loan will be 75% of the value. Okay, the loan will be 75% of the value. This is what they will expect you. Right? So this is usually, so that is why the security value should be more than the asset offer. 33.33% more. So 75, 25 now. So that's 25 is 33.33 now of 75. So that's 1/3 more than this. Right. Now, the buyer of the asset will get it free of charge. But suppose one fine morning, the bank decides to, the bank says, hey, we want my money given. That is called enforcing the security. When the creditor enforces the security, got it? When the creditor enforces the security, or the company goes into liquidation. So either the company has done very badly, so they can't repay the loans. So the creditors decide to go for liquidation. So they pass a resolution that you will study when you come to final. Don't worry now. I mean, self-paced module. Whenever you comfortable, you will study it. So the company is not able to pay. So the creditors decide to go for liquidation or insolvency, whatever. Once the proceeding starts, or when the creditor files a suit, or when the creditor comes and takes charge of his asset under the law, that moment the floating charge will become a fixed charge on all the assets available on that date. See, on all the assets of that class available on that date, and which may come into existence thereafter. So you are a huge retail showroom. You have taken a CC loan, cash credit loan, or OD, overdraft, whatever, against the stock in trade and debtors. Okay, since you are a retailer, not much debtors. So mostly it will be stock in trade. So you are repaying correctly going on, but suddenly you have some problem. You are not servicing the loan correctly. Bank is getting worried. So they sent a notice to you saying, we hereby withdraw our facility. We give you 15 days notice to close the loan. Make it nil. In case you do not do it, we will be constrained to lock up your showroom and sell the assets. On that day, the floating charge will become a fixed charge on all the assets available in that showroom, and which may come into existence thereafter. See, what could have happened? You could have placed some orders, and those could have also come in. So all put together, it becomes a floating. The floating charge will become a fixed charge. This is called crystallization of a floating charge. When water is liquid form now, it is in liquid form now. When you put it in the freezer, you put it in the ice cube making, form, and you put it in the freezer. 1 hour later, you come and see the water, which is liquid, would have become solid, ice. That is called crystallization. Liquid, the floating charge is floating. The assets are changing. Once you enforce, it solidifies and becomes a charge on those assets which are there on that day, or which come into existence thereafter. So this is the understanding of floating charges. Still, I thought I will give you one more example, one more analogy, or one more example I give you. Those of you who are from Kerala may understand this. In Kerala, there are a lot of pura and all that where water will be flowing and fish will be there. Fish will be floating in the water. So look, imagine Nalla or pura where water is flowing, smoothly water is flowing. Fish is floating in the water, moving. Now you want to catch a fish. What do? You take a net. Or sometimes we even take our dhoti and two of us will hold the dhoti, one on this side, one on that side. We both will hold it and we will lower it into the water. Are you able to understand what's happening here? So that dhoti is the floating charge. So the asset's moving. The normal goes, it will keep moving. This will be hovering underneath dhoti. Okay. Suddenly when I see enough fish, I lift. So when both of us lift it at the same time, whatever fish is there in the dhoti, it will become a fixed charge. Now that net, I lift the net. Then whatever is left in that will be my catch. That will fix a charge on all the assets. So normally floating, but once I enforce it, then whatever is there on that date, it will become a fixed charge. So this is the understanding of floating charges and fixed charges, right? So now before we move on, any quick questions I will answer. Thank you, Sir. Let's not. I sometimes react like this. It's part of me, part of being me. Okay, I'm not going to change now at 58. Anyway, I love all of you. I want to give you the best information and the best knowledge. Now Gunjan Devi asking question. Let's see. House owned by company and used by employees. Can company pledge them in bank for loan? Yes. House owned. See, boss. You some many cement factories, they'll be having a township. That entire township is part of the balance sheet. It's there in my balance sheet. Fixed asset. When I'm offering the entire cement factory undertaking, including the township also, I'm giving the township also. They're staying there. They're like my tenants. So you can, and it is a beautiful example of a fixed charge. Absolutely correct. Okay, absolutely correct. I'll give a simpler example, Ms. Gunjan Devi. Suppose you are having you have purchased the house, right? You are not staying there, you got another house. This house you are giving on rent, a tenant is there. Does it mean you can't create a charge on that? You would have created, to construct that house, you would have borrowed, then only given on rent. So fact that employees are staying there does not really matter. How the charge is created on depreciable assets and its assets value. Sir, when such cases are there, depreciable assets, the bank also will see. For simple, sir, I give a simple example. You are taking a loan on a motor car, sir, or a motor car. You are taking a loan on a motorbike, 300cc Enfield motorbike, right? It's a depreciable asset now. But how will they rent? Because think about it. As the years proceed, the loan will also get repaid now. So every year at the end of 12 months, some amount of the loan would be reduced. So asset value will reduce, loan will reduce. Asset value will reduce, loan will reduce. Are you able to understand this? That is what depreciable asset funding. So that idea is the reduction in the loan should be more than the reduction in the value of the asset. The reduction in the loan should be more. So we calculate in such a way that the loan repayment will ensure that at any point in time, the depreciated value, and again, remember, I am a creditor. I am not interested in your book depreciation. Are you able to understand what I'm saying? Your book depreciation rates may be different. I am not worried. I am more worried about the realizable value of that asset on any day. So that is what I am worried about. Are you able to understand? That is what I am worried about. So whatever is the realizable value, I will keep track. And that is, boss, it is up to the creditor to worry about it. Yeah. It is not for you and me to worry. The creditor is happy, end of it. So this is how depreciable assets. Okay. Mr. Harsh, mortgage, I have already explained. I am not giving one more time. I will give you thereafter no more. Immovable property, when it is offered as a security for a loan, mortgage, registration, document has to be registered. It has to be registered not only under the Companies Act, but also under the Registration Act. Clear, sir? Mortgage, immovable property, compulsory registration. Right? Then, pledge. Possession is given. Very, very important. Movable property. Possession is given to the lender. So, lender takes possession of the movable property. So, basically, mortgage immovable, pledge movable. Mortgage possession is not given. Only documentation is there, registration is there. Pledge, there is no documentation. Possession is given, that's all. And the lender keeps possession. Okay? And when the loan is repaid, possession will be returned. This is pledge. Now, in between these two is hypothecation, where movable property, but possession is not given. But the property is given as a security for a loan. Example, car, motor vehicles, machinery. These are all hypothecation. Okay. So I hope I have given you my best example. Okay. So one more time you ask me, one more time see, in spite of, see, now you are asking, I am giving. No, I'm not telling, no, I will go on. I will move on like that. I'm not telling. I'm answering your question. Okay. Floating charge, again explain, huh? Sir, fixed charge is created on a specific identified asset, whereas floating charge is created on a class of assets. The specific asset is not identified, but the class is identified. Did you understand my examples? When the company buys a car, specific car, borrows it, it is a fixed charge on that specific car. But when you are a car dealer and you are borrowing money for working capital purpose, then the security offered is all the cars in your godown. Okay. So that means no one specific car is identified. So the charge is floating on all the cars. And you can keep on buying and selling. The day the creditor says, give my money back, that day, the floating charge will crystallize and become a fixed charge on all the cars or all the class of asset which is there in existence with you on that day. Okay. I hope I have given you an explanation. Can you confirm that you have understood, Mr. Dev? Also, Harsh, since both of you wanted me to repeat it, just want to be sure that you have understood it. Thank you. So that, I'm happy that I have finished it. Point number 3 of floating charge. Sir, you go to who is asking this question? Okay, you go to, because if it is southern region, I had given you a local brand. Okay, you go to Jain Sons and you buy a refrigerator. Okay, now you are buying it now. That Jain Sons, the guy who sells all the household equipment, he's got a huge showroom now. He has borrowed from the bank against the security of all the stock in trade in the godown, in the showroom and godown, right? Including that fridge that you bought. Now, when you buy it, that charge will not come to you. You get it free of charge. You go home, enjoy the fridge. For him, he can sell it to you in the ordinary course of business free of charge. Okay. I'll give you one more example, you will understand. Suppose there is a land. The company has borrowed money on the land. Loan is pending. Please understand. Now you want to buy that land. Can you buy that land free of charge? Means, can you buy that land without the loan? No. Either you repay the loan or go to the bank and say, I am going to pay him the balance. I undertake to repay the loan to you. So if you want the asset, you have to take the charge. That is called fixed charge. It is a charge on specific asset. And the charge will move with the asset. Whereas floating charge is on a class of assets. So during the ordinary course of business, the asset can be dealt with. The buyer of the asset will get it free of charge. Okay. But once crystallized, gone. Thereafter, it will be locked. Okay. When floating charge convert to fixed charge, that time if the amount of stock is less than the idea. Madam, that is your luck, Maha. See, why are you not able to understand it? On that day, if nothing is there, 3 vertical lines and go, that's all. What can we do about it? To understand the principle here. And whether it is secured or unsecured, obviously it is unsecured, madam. You have to ask me. How will you classify it? Unsecured only. Are you able to understand what I'm saying? This is not some, why are you asking it as $1 million question? See, boss, you give a loan, be careful while giving a loan, ma. Please do not give a loan which is more than the value of the asset. That is your call as a lender. Why are you bothering about it? It's a lender's problem. No bank will lend money where the security value is less than the loan value. If so, then that if you are in that bank and you are signed that, you lose your job. Be very careful. Security value should be more than the value of the loan. If it is less than that, bad luck. See, insolvency. What can you do? Gone, loss. Write it off. That's all. Forget loss, secured, unsecured. It is a loss. Because after that, who is going to? But to the extent that it is unsecured, you can still collect it from him. You can file a suit against him. See, you recover from the asset. Suppose the asset value is 60. Your loan is 100. You sell it and get 60 now. Balance 40, you become an unsecured creditor. Go and stand there. I'll come to the point now. To the extent of security, you get the money. To the extent it is not covered by security, you become an unsecured creditor. In normal way, you go file a suit, pay it, or go for voluntary liquidation, join all the creditors. You also become one more creditor. Stand in the queue. That's all. No problem. Okay. And thank you. Going. Floating charge asset offer only started. It's a personal house, sir. It's a company, ma. How you can take it to a personal purpose? I don't think. The ordinary course of business. See, suppose you are the MD of the company, you are entitled to take one car and take it for you. But then that will be again you are part of your remuneration. See, these things are all very practical. Don't waste your time. Don't waste your time thinking like that. It's not worth. Exam is very simple. Simple concept, simple topic. Why are you confusing yourself? Okay. I sell my asset with permission of lender on which fixed charge is there. Will purchase it? No. See, if you are selling with the consent of the creditor, what the lender should do, please note. He should consent. That means he should say, I am releasing my charge. Then the charge will be released. Only then the buyer will get it free of charge. Again and again, I'm telling you, madam, that company is having a property. It is worth 4 crore. They've already borrowed from the bank 1 crore. Their business is doing badly. They want to repay the loan, sell the land, repay the loan, get out. So they come to me. I am the buyer. I go there. I verify with the bank. Finally, I go to the bank and I tell them, Baba, I want to buy this land. Your loan is there. How much do you want? They say we want 1.3 crores with interest. But I said, no, I'll pay you 80 lakhs now, hard cash. Take it. Are you ready? So a tripartite agreement will be prepared between bank, buyer, and the company, by which the bank will say, if you pay us in this way, we will release the charge. So first I will pay to them. Then I will release the charge. They will give me a letter saying charge is satisfied. Then I'll go to the registrar. I will file the removal of charge first. Both the sub-registrar and also registrar of companies, I will see to it that the charge is removed. Once the charge is completely cleared, the asset is free of charge, only then I will pay you, means the company. And then again, we will go for registration, free of charge, I'll take it. But subject to the loan, how I will get it free of charge? You tell me. How is it possible? You tell me how to do. Who will be the fool here to do it? Buyer, the bank? No way. Unless the charge is cleared, the bank won't clear. Unless the charge is cleared, I'm not getting good title. Why I will buy it? So this is a very technical point. You understand? Permission means, don't think it's a permission, oral permission. It's a huge documentation. The bank will approve it in the board. Then they will give you a letter. Then you have to go to you will have to pay fully. Then they will say, no objection. They will give NOC to the charge being cancelled. Then you have to go to the registrar, record satisfaction. You have to go to the registrar of sub-registrar, remove the mortgage. Now the property will become free of charge. Then you pay the balance amount to the seller, go for the registration, register it in your name, enjoy. Okay. That is how you have to do. You got it? What about grantor, terms, and liability, if any, unsecured? I don't understand your question, Navneet. And your question is not clear to me. Try to reword it in an English that I can understand. What about grantor, terms, and liability, if any, unsecured loans? Guarantor. You're talking about guarantor or grantor? Guarantor, see, guarantee is a different story. Don't bring that here. Guarantee is totally different. Please don't bring it here. Don't confuse with guarantee. If you're talking about GUARANTE, guarantee, are you talking about guarantee? If so, then kindly reword your question correctly, I will answer. And guarantee is a totally different topic. Don't bring it here and get yourself confused. See, even if there is a guarantee, it is unsecured loan only. Only if an asset is offered as security, it is a secured loan. Okay. Correct. Now we come to a very important point. Manish Kumar seamlessly takes me to the next topic, which is duty to register. So the law, section 77 says, every company creating a charge shall register the same with the registrar of companies. Friends, listen to me. Registration under the Companies Act is one procedure. In addition to that, under the common law, there are other documentations also to be done. Mortgages are to be registered with the sub-registrar. Vehicle hypothecations have to be registered with the regional transport officer. Got it? Everything, there are other documentations also that has to be complied with. Merely registering with the registrar of companies is not enough. But going through the other formality and not registering with registrar also is a problem. So if this is a company and the company is creating a charge, in addition to other legal formalities, every company creating a charge shall register the same with the ROC also. So registration with ROC is one more formality. It is not the only panacea. That is, if I register with ROC, not enough. If other registrations are required in your state or in this country, you have to comply with it. Okay? I hope I'm making it abundantly clear. So don't ask that question again. Means, if you are a bank and you are lending on the security of an immovable property, you have to register the mortgage with the sub-registrar. Yeah. That is the instrument evidencing the charge. That becomes the instrument. That has to be now registered with the registrar of companies. Got it? Are you able to understand this? Yes. So every company creating a charge, this is no exemption. Every company creating a charge shall register the same with the ROC. The asset being charged may be situated in India or outside India. Means you are an Indian company, you may buy a property outside India. Still, if a charge is being created, whether inside India or outside India, it has to be registered with the register of companies because you are a company. Please go back to definition of company. What did he say? Company means only Indian company. Company incorporated in India. So company means only company incorporated in India. If you are a company incorporated under this Companies Act or earlier company law, you are a company. So if you are creating a charge on any asset, whether in India or outside India, compulsorily charge is to be registered. It may be movable or immovable. It may be tangible or otherwise. Got it? So all are covered. Movable, immovable, tangible. Otherwise, they say. They don't say tangible or intangible. You know why? Because tangible, table, chair, machinery, car, land, all are tangible. Right? Now, intangibles, trademark, what is that? Copyright, patent, all that. You are very well versed in all that. Now, money, securities, shares in companies, whether are they tangible or intangible? You will say intangible. Basically, they are neither intangible. See, boss, you cannot see a share, ma. It's a right. That is evidenced by that entry in the DP. Got it? So it's a very peculiar category. Call it monetary assets or financial assets. So that's why they are saying tangible or otherwise. Okay. What is the consequence of non-registration? Very, very interesting and important. So before that, any questions are there? I'll quickly answer it. Yeah, nobody is asking any further questions. Therefore, I will assume that you are clear up to here and we will move on with our topic. Yes, whenever you create a charge and you register it with the registrar of companies, it becomes a public document. Just like memorandum, just like articles, just like anything, the forms that you file, everything is a public document. Na? Like that, when a charge is registered with the register of companies, it becomes a public document. First of all, why are they having this provision? Simple, sir. A sole proprietorship or a partnership, the partners of sole proprietor has unlimited liability. I need not look at the balance sheet of a sole proprietorship or partnership because if an asset is shown there, that is available to me. Plus, I can file a suit and attach the personal assets of the partners, the personal asset of the proprietor. But once I come to the company, I cannot go beyond the company. I cannot even touch the shareholder. Maximum his liability is unpaid portion or the guarantee given by him. That's all. Beyond that, I cannot go to him, the shareholder. Directors, I cannot touch. They are officers, and so long as they have complied with the law, nothing can be done to them. They can't be asked to repay the loan. So I am the creditor. Therefore, I'm going to look only at the assets which are there in the balance sheet. Now, I should be very sure that these assets are available freely to me for charging, to be offered as a security. How to verify? Of course, I can go to if it's an immovable property, I can verify with the sub-registrar. If it is a certain car, etc., the RC book. But for all assets, such facilities are not there. Therefore, they say you are a company, then you are offering an asset, you register it with the ROC. So that if you are going to sell that asset later, the buyer can verify from the ROC whether there is any other charge. One. Similarly, new lender can verify with the ROC whether any earlier charges there against the property. Sir, fixed charge. But I'm using the word permission, sir. No charge holder will give permission unless his loan is repaid. So don't you think fixed charge on a specific asset, you want to sell it now. You have borrowed money against the asset. You mean to say the creditor will not have any right to say anything? You mean to say we won't have to take his permission? Whereas, if it is a floating charge, what happens? In the ordinary course of business, that class can be dealt with. Whereas here, that asset cannot be sold. By permission, what we mean is consent. Meaning, when will you give consent? If you are a creditor and you got a security, I want to sell it. I come to you and tell you, please give permission to sell the asset. What you will tell? I will give permission, Baba. I will give my consent. No problem, Baba. Pay my loan. Take the consent. So that should be done. Only then the asset can be sold. This is what it is. Whereas in floating charge, I don't have to come and ask your permission. Ordinary course of business. I can deal with the asset. If you see the examples, you will understand it better. Please concentrate on the two examples I gave. Automatically, you will understand fixed charge and floating charge. Car, I am buying for my use of the company, fixed charge. I am a dealer in cars. I buy and sell, floating charge. If you understand that, it's very easy. See, it's a good, very legal question you're asking. It's a very, very technical question. Floating charge becomes the fixed charge. Then what about the invoice with pending delivery? Whether that stock will be considered of that. Sir, you are asking a very intelligent question. For that you have to have accounting standard knowledge, revenue recognition. See, I have sent a notice to you, right? On that day, what you have done, you have raised an invoice on people. They have come and taken delivery, but the car is still there. That is not your car. That is not part of the charge. But that will be very few categories. See, that day sale, those people you have already raised the invoice, you have cut the invoice, you have prepared the gate pass. No, I just have to come and take it and go. It is parked in the yard. On my behalf, you are keeping it in the yard. Okay. In fact, you know how I will clinch this? I will not even go by invoice. I will go by insurance. When is the insurance? Insurance in my favor now. See, you are going to take out an insurance in favor of the buyer now. That day, I'll take. Or if it is not, I'm giving example of car, any other goods. See, has the ownership in goods transferred to a third party, then those assets are not available for security. Are you able to understand? So invoice is already cut. See, invoice cutting, I'm not very particular. It should be more than that. There should be some method of that. The possession should have been given to him, or some delivery should have happened. Got it? Or that asset should have been put in a place where it is no longer mine like that. So that is So in those cases, yes, it's a very legal issue. So you will say, sir, these 15 cars are already sold. They are not mine. They are belonging to these people like that. Already advance has been received. Money has come. So why am I worried? Take it. See, if in case I have sold it, now money would have come. Okay. Or else what you will do? That debtor is there. Now you will realize it. Suppose I have delivered the goods. Now it becomes a debt. Yeah. Now once they crystallize it, stock and debtors. So I will take over the debtor also. So to that extent, I will take over the debt. The invoice is cut. It becomes a debt. I take over that debt and I will collect it and recover it. That is how we have to do it. Okay. So, once you understand the topic, now it is very easy. One more thing I'll tell you. Don't think this is pure theory. This is your life, your bread and butter when you sit in a company. You are all going to become chartered accountant, you are telling. This is your job, yeah. On a day in and day out basis, you will be dealing with this. When you're a large company, GM Finance or CFO, then on day in and day out basis, crores and crores of rupees you'll be borrowing, creating charge. So you have to be very careful about it. Tomorrow, if the charge is not registered, what will happen? Consequence of non-registration. Remember, if you are a CFO, you are also KMP. What is KMP? Key Managerial Personnel. We'll be seeing that now. Officer in default, we'll be seeing you. CFO will be included in that. Okay. Thank you for feeling that it is interesting. Will the charge on the asset be considered to be automatically surrendered? No, Rituraji. That is exactly the point. See, yes, on the date of repayment, the loan will be repaid. Technically, the charge has been satisfied. But unless you register it, how will people know about it? So registration is important. Are you able to understand? So I will say, you have to pay, get the release document, and file it with the registrar, inform the satisfaction, then charges closed. Otherwise, see, many people will do that. I've seen many companies where they will register the charge correctly because the bank told them. Subsequently, they'll repay the loan, but they will not register the satisfaction. So those charges will be open. Got it? And there's a deadline for registering it also, that satisfaction. We'll see that. So it's a big pain. and a lot of money for a company secretary. He will charge you fat fee for getting condemnation of delay, going to tribunal, all that nonsense you have to do. So better. So your job is not over until charge is registered and satisfaction is registered. Okay. So mere repayment is not enough. First repay, then get proof of repayment or no objection certificate. Then file the details with the registrar. Only then the loop is closed. Correct. The idea of making it a public document is not only investors. You see, more than investors, creditors will be very interested because the bank is going to lend money now. You are offering a property. We want to be sure that the same property has not been given as a security to another bank or to another creditor. How to know? Two places I can go. Two places. If it is immovable property, I will go to two places. Both the places I have to go. One, I will go to the jurisdictional sub-registrar based on the survey number location. Based on the location of the land, I will go to the jurisdictional survey number, jurisdictional sub-registrar, revenue district. There I will verify the records, see whether any mortgage or deposit of title deeds is there, or get an EC. If the EC is coming clean, God. Or else I will know who was. Even if there had been a loan and that loan got cleared, that will come in the EC record. Everything will come. Its EC record will be a history of the property's ownership and what all transactions have happened. Okay, so that I will do. Then I will also go to the registrar office or I'll go online and ask a company secretary to do a search. See whether any charge is registered. If so, whether it's cleared. Both I have to see. That is just like caveat emptor, caveat lender. The lender should be very careful. So it's more useful to lenders than to investors. In my humble view, investors may not bother. They're not bothered. Keshavji, I will answer your question in a very short while. My slide will give you an answer. Just wait, hold on. Your question will be answered in short while. Correct. Very, very practical. Now, what is the procedure? 77 continues. You have to file certain particulars of the charge, meaning details of the charge should be filed. Form is there. As usual, see, company law means there will be a form. Our friends, the company secretaries, love the form numbers. They keep on quoting form number, form number. Institute also now very particular that you should remember form numbers. Okay, so please remember form number CHG1 for other than debentures. When a property is offered as a security, okay, other than debentures, if you are taking a loan, any other type of loan other than debentures, secured loan, form number CHG1. If it is for securing debentures, then you will file form number CHG9. Got it? Along with that form, you will also file a copy of the instrument, if any, creating charge. If any, because hypothecation, there will be an agreement. Mortgage, there will be a mortgage deed. So there will be some instrument creating the charge, but pledge, there will be no instrument. Because maximum you can have memorandum of deposit. That's all. Memorandum of pledge. But that is not in any way. See, here I have transferred possession. Then you will give a receipt saying, we hereby confirm having taken 20 kilos of gold as security for repayment of sum of rupees. So they give it to you. But that is not instrument, but you have to keep it. And along with, you have to file it while creating the charge. Okay. Now, the instrument creating charge shall be verified under the seal of the company, means if there is a corporate seal, or else any director or company secretary will sign on behalf of the company and by the authorized officer of charge holder, meaning if it is a bank, the bank officer. If it is a secured creditor, that secured creditor will sign. Okay. In the case of charge relating solely to foreign property, any person other than the company interested in the charge may verify. Any person. Company interested in the charge means the company which is creating the charge cannot sign. Other than that, because they will sign not as the charger, as the borrower. So somebody else should sign other than the company interested in the charge. Now, what has to be registered? Provisions relating to registration to apply to the following situation also. So Basically, when you create a charge, it has to be registered. When you create a charge, in addition to that, whenever you modify the charge, it has to be registered. We'll see modification. Whenever you modify the charge, then it has to be registered. Correct? Okay. Means when there is a change in the terms and conditions. I'll give one example. Simple example, you will understand modification. You go to the bank, you borrow CC, 20 crores CC you borrow, again stock in trade and debtors. Stock and debtors, 20 crores. Correct? So, in your balance sheet, current assets minus current liabilities, working capital gap, that is, you borrow 20 crores, your working capital gap is 30 crores. Debtor plus stock plus advances minus creditors, trade creditors, equal to 30 crores. Now, that is the amount of stock and debtors which is there in your balance sheet. Now, the bank will not give you 30 crores. They will ask you to bring 10. They will give 20. This is how they normally do. Or they'll ask you to bring 5. They'll give 25. Whatever. So here they are giving you 20 crores. Right? And so you borrowed it. There is a floating charge. It has to be registered. It has been registered. At the time of creation, I have registered it. Now, 1 year later, you find that your business is growing. So your current working capital gap has become 40 crores. Now you need another 10 crores. You go to the bank, you tell them, boss, you given me 20 crore, not enough. I need one more 10 crore. So same loan, they enhance the limit. Are you able to understand this? They enhance the limit. Enhance means increase. So they increase the limit. They are now saying you borrow up to 30 crore. So that means from 20 crore, it has gone up to 30 crore. This is modification. So the gap from 20 to 30 had a 10 crore. That has to be registered. You have to inform the registrar only for the 10 crore. Common mistake that many people do is they will once again register for 30 crore. So already registered 20 crore. Then this fellow will again fill up at 30 crore. Not this fellow. This fellow has also done it. In those days, when I was starting my career, I used to do for one of my clients, I did like that. I filed 20 crore. Then again I filed 30 crore on that time of modification. So, which means what? Now, according to the books of the registrar, it will be 50 crore. Correct. So the registrar, one gentleman called me and said, Mr. Srikanth, you come here. What are you doing? You are a young chartered accountant. Please understand. He taught me. So don't do like this. Yeah. Don't fill the first 4 columns. Only the modification you put. You say increase from 20 crore to 30 crore or 10 crores increase. So they will ask you, what is the increase? He said, put 10 crore. Don't again put 30 crore there. That's what he taught me. I'm talking about when I was 22, 23 years old. When I was a young man. Not now. Maybe I was 25 years old that time. So any variation in the terms and conditions to be registered. It could be variation by way of change in the interest rate. Rate of interest can be changed. Or variation in extent or operation. My example now, from 20 crore to 30 crore, that is extent. Where from 20 crore loan, it is now becoming 30 crore. Or operation of any charge. So any terms and conditions, T and C means terms and conditions are to be, if there is any change, any variation, that has to be registered. Got it? This is one example. Another example is when you are acquiring a property subject to charge. See, when you are buying that property, at the time of buying, I gave an example. You go to the bank, you tell the bank, I will take over the loan. They agree. So you go through that process. Then you go to the seller, you tell him, already you are due to the bank 13 crore. I will undertake that loan. Okay, balance amount, here is the money, come, register it in my name, subject to the charge. So now he will escape. I have to pay to the bank. So that charge from that company, it is moving to my company. See, my company is acquiring subject to charge. So he will have to file satisfaction. Please understand, he will file satisfaction. For him, the charge will go, the loan will go, asset will go, charge will go. For me, asset will come, Loan will come, I have to register charge again. First, the earlier charge should get vacated. Vacated means cancelled. So Ramja, don't get worried. Again and again, don't think it's vacation means some holiday. No. Vacated means cancelled, removed. So the earlier charge should get removed. New charge should be registered by the acquiring company. Fresh. Got it? So this is the concept. Okay. Everything should be filed with the registrar. Nothing is with anything that we teach in company life. There is a farm number. It has to be filed with the registrar. Can I replace the charge asset with another asset? Yes, you can. That is one type of satisfaction. Suppose it has happened in many cases. See, simple ma. I am a developer. Okay, I have purchased land. Now I need money. So I came and gave one land to you, right? And you gave me the loan. I bought another land. I developed it. I developed it. Then it sold well. I made money. Then I bought another land. Now what happened? I got cash crunch. I want more money. So I come to you. Now I'm saying, sir, I gave my original land there. Now that has grown in value now. I want to develop it. Here is the new land I have got. You have lent me only 7 crores, right? For that 7 crore, this land is more than enough. It is worth 10 crores, you take it. That property is worth 20 crore. Why should you keep a 20 crore property? Release it. I will give the new property as a security. So the same 7 crore you continue. We will continue that loan, but we will exchange the asset. So this 10 crore property, you take it. The 20 crore property, you release. Well, can definitely be done. That is all part of the game, boss. Many of my clients keep doing it every day. So they give this property, take that property. For everything, documentation. So first you have to file for satisfaction of that charge on that asset. Then you have to file a fresh charge in the new asset. That will technically speaking be a fresh charge. It won't be a modification because that charge will end on that asset. Now close it. Create a fresh charge on the new asset. Why will company take? Simple, boss. I'm getting it with funding now. See, think like that. Sir, 50 crore worth property, boss. Already loan is there for 30 crore. I don't have to go and borrow now. I go to the bank. They see my balance sheet. They like my balance sheet. They like my income stream. So they say, Mr. Srikanth, we'll lend you the money. Okay. So you come and we are willing to extend that loan to you. So instead of paying 50 crore, I pay only 20 crore to the seller. Balance 30 crore loan is there. I keep paying EMI. Good, no? So that is all we will buy. So why will I not take it? I'll happily take it. I have sold like that. Once one of my property, I sold it like that. I told the buyer, boss, loan is there. Take over the loan, take the property, give me the cash. I will run away. That's all. You take the loan, you repay. So property worth X. You give me my money. Balance loan, you take it, you repay, enjoy. Okay, like that. Sir, are there any expenses relating? Yeah. Everything, there is a filing fee is there, all blah, blah. That will not be treated as assets. It will be capital. No. It will be treated. Actually, it is that I'm not really aware, ma'am. See, you people are all expert in accounting and all that. I'm not an expert. But I don't know. I can tell you common sense, but I don't really have an authoritative note from. See, this has to come under PPE only. No, it means in the accounting standard on PPE, I have not seen this anywhere. I think AS10, I have not seen it anywhere. That is where, see, when you are creating a charge, that expense, I don't think you will capitalize. See, after all, you are not raising the loan. Suppose you are issuing debentures. For issuing debentures, you are spending money. Then that is capitalized. But here, you are only registering the charge. So those expenses, I don't think we will capitalize. I will not. If you will, it's your call. Okay, but I will not. I will not capitalize. I will say write it off. Because it's not a big amount. It's not something huge. Okay. So here are some examples of modification. We'll quickly run through it. Yeah, before one of you tells me, let me give a small break for 5 minutes. Small break, 5 minutes. Sir, 5 minutes ka break, sir. Boss, break. Hello. Yeah, break, boss. Welcome back from your break. So Rahulji was asking about expenses for creating charge, registering it with ROC and all. And I said that, in my humble view, that is a revenue expenditure. It should not be capitalized. Now, Suman Goyalji has this doubt. Charges cannot be capitalized. No, madam, I think you got a confusion. Charge, see, it is not why you will capitalize. Charge is a concept. Okay. Asset is there in the balance sheet. That asset is being offered as a security. It is a legal activity. It cannot come in your accounting itself. Maximum, how it will be coming now? See, on the asset side, there will be an asset which will be anywhere there. On the liability side, there will be a loan, right? Now, the fact that this loan is linked to that asset is an information. I think you have not understood what is a charge. That is the problem. Charge is by an act by which an asset is linked to a loan. That's all. So the loan is already there in the balance sheet or liability side. Thus, the loan is already there in the balance sheet on the liability side. The asset is already there in the balance sheet in the asset side. You're only linking it through a legal process called registration of charge. Maximum what I can do now, what we normally do is, when we are giving secured loans, notes on accounts for secured loans, there we will mention that this loan is secured by the charge created against that asset, whatever. Only notes on account will come. So your question itself is a little confused question. Kindly, sort of get it clarified. So what Rahul Sharma was asking was not charge. He was asking about expenses in connection with the charge. That I'm saying it's a revenue expenditure. It has to be revenue. It has to go to the P&L account. Means for registration of the charge, there will be expenses now. Filing fees, company secretary fees, all that sort of stuff is there. That will be, the bank will debit it. Usually the bank will do it. I will tell you why they will do it also. Bank will do it and they will debit your account with that amount. So that my humble suggestion, treat it as a nominal account, revenue expenditure, take it to the balance sheet, take it to the P&L account. That is all I was saying. So charge per se, where will you capitalize it? You tell me. Conceptually, you understand what is a charge first. Then only you know whether it can be capitalized or not. You can't capitalize concepts, madam. Charge is a concept. Okay, asset is there in the balance sheet. Liability is already there in the balance sheet on the liability side. You are linking the two and saying a charge is created on this asset. Okay, understand first. You got the principles now? Get the principles clear, then the doubt will not come. Okay. Now, here are some examples for modification of charge. These examples are given more for your knowledge. So don't break your head on it. If you don't understand, leave it. If you don't, I will explain little, but if you still don't understand, it doesn't really matter. Basically, the word modification means what? Change. Any change in the terms. So if you don't like modification, a long word, give me short word, change. So where the charge is changed. So you like that word, better use change. But in the law, they use the word modification. Modification means change. Okay. Sir, please modify it. Sir, please, your language is not proper. Please modify it. Means what? Please change it. So, simple word change. Complex word modify. So where the charge is modified by varying any terms and conditions of the existing charge through an agreement. Any variation in terms and conditions. Give a simple example. The loan is to be repaid in 6 years. Now you are saying we will extend it by 1 more year. It's a variation in the terms and conditions. Earlier we said 6 years. Now you are saying 7 years. Variation, modification, register. Where the modification is pursuance of an agreement for enhancing or decreasing the limit. I gave an example of it clearly. You are currently borrowed 20 crore. Now you want to increase the loan to 30 crore. Enhancing. You are currently borrowing 20 crore. You feel, I don't need this loan. I will reduce it. 20 will become 10. That is also modification. Okay. Where the modification is by ceding a pari passu charge. Ceding means surrendering or accepting. Ceding, C-E-D-I-N-G means surrendering. So I have ceded to him means I have surrendered to him. Okay. Now what I have surrendered? Earlier, I was having pari passu. Meaning what? No, you understand, you already learned pari passu. When we studied deposits and debentures, I told you. Now again, I'll explain. There is a property. It is worth 10 crore. I borrowed 3 crore from one bank. I gave them a charge. I registered the mortgage. That was the first charge. So the first charge holder has the right, when the property is sold, the entire amount due to him will be first paid. Then only the second charge will be paid. So later another bank came, and they said, we also will lend money to you. So we said, the second charge fellow said, I want pari passu charge. Meaning what? I will not be second charge. Okay. Now, so what happens? The first charge holder is now ceding a pari passu charge. They are giving, see, they are now agreeing. I will not have first charge. I will have pari passu. Pari passu means what? In equal proportion, equal step. So, if the asset is sold, if he gets, but not, see, equally. Please understand, it is not equally, in equal proportion. There is a difference. Suppose the asset is worth 10 crore. The asset is worth 10 crore. I have lent 3 crore. You have lent 2 crore. Okay, then our ratio is 3:2. So we are having pari passu means when the asset is sold, whatever is realized, I will get 3, you will get 2. Suppose the asset realizes only 4, then the asset realizes only 4 lakhs, 4 crore. Then 4 crore into 3 by 5 I will get. 4 crore into 2 by 5 you will get. You got it? So that is how it has to be done. So you will get 3 crore 20, I will get 80 or whatever. So that is how we have to understand it. Okay. Now, so this is called ceding a pari passu, which means I am the first charge holder. Now my charge is modified. How? My first charge is now becoming a pari passu charge. So that has to be registered. Are you able to understand? It is modification in my charge. I am the first charge holder. Now I am becoming pari passu charge. So it is a modification for me. For the new guy, there is no modification. It is a fresh charge. You have to register it fresh. First time, it has to be registered. Are you able to understand the point I am making? I lent first. I got full charge, first charge. Now you are coming, getting one more loan. That second fellow is coming and saying, I want pari passu. I am ceding it. I am saying, chalo, take. We both will be pari passu. Now, for me, it is a modification. Because my earlier first charge has now become pari passu. For him, there is no modification. He is coming in as a pari passu. So it is a first time registration for him. So for me, it's a modification. Okay. Where there is a change in rate of interest. Got it now? Other than bank rate. I'll explain this. I'm sure you're all experts in finance, so you'll know. There is something called fixed rate and floating rate. Fixed rate and floating rate. In fixed rate, what happens now? We renegotiate the rate. So maybe 2 years later, the bank will renegotiate with you and say, hey, earlier we were giving you fixed rate 9%. Sorry, now we have to make it fixed rate 9.5. So there is a change in the rate of interest. Suppose they give you floating rate, meaning what? Throughout the tenure of the loan, the rate of interest will be pegged to MIBOR. The rate of interest will be pegged to MIBOR, means Mumbai Interbank Offer Rate, MIBOR. So that rate, MIBOR, Mumbai Interbank Offer Rate, is the rate at which bank will lend to bank. That is the rate at which the banks will lend. So that will keep on changing. Depending on the demand for money, that interest rate, if there's a more demand, rate will go up. If there's a flooding the market, rate will come down. This is all high-level macroeconomics. Don't go too deep. Just understand. Floating rate means the rate will float along with the MIBOR. So if the MIBOR is going up, so we will say MIBOR plus 200 basis points. So MIBOR plus 200 basis point means MIBOR plus 0.20. Got it? So MIBOR is going currently at 8.5. Then it will be 8.5 plus 0.2. So that is 8.7 for me. MIBOR plus. So whatever may be MIBOR, my rate will. Every quarter they will fix the MIBOR and they will charge the interest. I have to pay. So whenever the MIBOR is firstly fluctuating, I can't keep filing for modification. Yeah. So for floating rate, no need to file. But fixed rate, If it is renegotiated, new rate is there, that has to be filed. I think these are all simple concepts. If you open your mind and listen, you will understand it. But if you have a doubt, you ask me. But understanding, I don't see any problem here. But if you have a doubt going beyond my explanation, I will answer. In fact, going beyond the legal part of this topic, now, I think this is very practically important for you. Later on, if you go into the business world of finance and business, these terminologies will be used by people casually. So there, you cannot complete CA, then go to the bank for talking, and they will ask you, sir, we want pari pasu charge. Kya pari? You can't do like that. You should know what you are talking about. So, where there is a change in repayment of schedule of loan, I told you, 6 years, or installments. Maybe you want 72 installments. Now you made it 36. Anything. Obviously, this will not apply to working capital loan, which are repayable on demand. I told you, on demand means OD. If they give you notice, you have to repay. That is called on demand. Whereas term loans will be repayable over a long period. Term will be there, over a fixed term. So, any change in that schedule is a modification. Where there is a partial release of the charge on a particular asset or property. It is like, I can give you 100 examples. See, I've got a lot of clients who keep doing it. They'll have a huge tract of land. Then in South Tamil Nadu, Madurai, in Chennai, we call it ground. In Coimbatore, Madurai, they call it cent. Okay. So roughly 5 cents is equal to 1 ground like that. In Chennai, we call it ground. Whereas I don't know what they call in Mumbai, but here we call it ground. 1 ground is roughly 1 ground is 2,400 square feet. 2,400 square feet will become 1 ground. 5 cents will become 1 ground, roughly. So since I'm more ground, I use, even when I go to Coimbatore or Madurai, I use the ground. I do the quick calculation. They will say, sir, 15 cents, immediately 3 grounds. Like that, I will make mental calculations and I start. So the point here is, these people have 10 grounds. Now, what they will do, they'll create a charge on the entire 10 grounds. Now, suddenly they will want to sell one portion. So they will go to the bank and say, sir, I've given you a property worth something like 15 crores, 10 grounds. Now, you don't need 15 crore charge. Your loan is only 5 crore. So what you do, one portion, say about 3 grounds, out of the 10 grounds, you release it. I will create charge on the remaining portion of the land. Already the charge is there. Now what is happening? One portion of that land is being released. So what they will do now, they will give a letter to the sub-registrar saying, this part of the survey number, this measurement, we are releasing. So to that extent, partially it will be registered. The charge will be satisfied partially. The balance charge will continue. So this becomes a mortgage of the original charge. The modification of the original charge. These are all part of business now. See, for you as a student, this may sound very bewildering. But for a businessman, this is life. That is how he raises funds. He lives his life. Tomorrow, when you become a finance professional, this will become your life. Okay. So this is the examples of modification of charge. Let us see if any doubts are there. Sometimes students find it a little difficult to understand modification. Some of the examples. Yeah, don't say first charge, subsequent charge. You can say first charge, second charge, pari passu charge. If it is first charge, second charge, the relationship is when the asset is sold, first charge holder will be paid. Then only second charge holder and subsequent charge. So second and subsequent, you can say. Agreed. So, but if it's a pari passu, then proportionately they'll get. Not pro rata, in equal proportion they will get. Good, not many doubts in this area. Because one session, I remember this modification, we were literally struggling to complete it. Where a charge or modification is duly registered by the registrar, a certificate of registration or modification shall be issued by the registrar. So, certificate of registration will be given, which is in form number CHG2. So, you file the details in CHG1 or 9, as the case may be for debentures. He registers creation. certificate of original first time when you register the charge, he'll give you CHG2. That is under section 77, subsection 2, read with rule 6.1. Subsequent modifications, whatever may be the modification, you will inform now. In the same CHG1, hello, modification also in CHG1 only, right? But while giving the certificate, it will be in form CHG3. That is section 79, read with rule 6.2. Should I remember section numbers? No need. I've answered it many times. Why I am giving section number? Reference. If you want to refer, otherwise don't. What I am giving you here is enough. If you still want to refer, refer. Okay. If you remember and tell, you are really great. Okay. See, today I was appearing before CAT appeals, section 2, Income Tax Act, 2, subsection 42, capital A. Read with explanation 1, within bracket, small italics I, within bracket B, 11B. That was the topic. That is the indexation. And when an asset is acquired through gift, the cost of acquisition of the original owner to be taken. Also, the period for reckoning, long term or short term, you should use the date of acquisition of the original buyer, like the 242A. On that, there was a dispute and all that. Why I'm saying section numbers, if you have to remember, otherwise, how will you argue? So it's good to remember. No, sir, my memory is very poor, sir. Let's leave it. But write CHG2 and CHG3. Whenever a charge, so this could be a multiple choice question. See, the form in which the certificate of modification of a charge shall be issued by the registrar in form number CHG1, form number CHG2, form number CHG3, form number CHG4. This will be the question. How to select? So if you know the answer, you get, otherwise you don't. Okay. The certificate issued by the registrar under Rule 6.1 and 6.2 shall be conclusive evidence that the requirements of Chapter 6 and the rules made thereunder as to registration or creation of charge have been complied with. So once the registrar puts his chop, in fact, it's not a physical document. It's online. You register it, you upload it, then they issue an online thing. Okay. Electronic means you download it, print out and put it in the file, save it in electronic form, keep it. Okay. When you're auditing a company, remember, if you are having secured loans, please be sure to verify whether charge has been created, whether the charge has been modified during the year. If so, whether the modification has been registered, whether certificate has been obtained in CHG2. See that certificate. Document that you have seen it. Okay. Got it? This is how I will connect it with auditing. Okay. Also, if it is an immovable property, verify whether it has been registered with the sub-registrar. See, when we are doing bank audit, this is what I'll do. From the bank point of view, bank is the lender. So from the lender's point of view, I will see if it is a company, I will ask the manager, sir, for these loans where the security has been offered by a company, have you registered the charge? No, sir, mortgage registered, sir. Baba, that document I've seen. I'm examining the document, there is one side. Show me the registrar. So they will be worried. Then they'll go to the company. Then the company secretary will bring all the documents, show it. And so that is how you have to do it. Okay. Now, what is the consequence of non-registration? What is the consequence of non-registration? I asked the question here, but I'm going to answer it now. Consequence means result. If you think consequence is a very big word, I don't want to remember, sir, then result. Result of non-registration. See, I write the exam, I get the result. I do one deed, I get the result of that deed. Am I correct? Everything that happens to you is the result of something you did in the past birth. This is a consequence. We are consequential. Okay, everything is consequence of what happened. Okay, don't continue to create more consequences. Okay, I got married. Consequence, 2 children. Okay, I'm just teaching you how to use the word consequence. Consequence, marriage. Consequence of love, marriage. Consequence of marriage, children. Okay, so consequences lead to consequences. Chalo. So what is the consequence of non-registration of charge? if a charge is not registered, then no charge created by a company shall be taken into account by the liquidator or any other creditor unless it is duly registered, and certificate of registration of such a charge is given by the registrar. So, if the charge is not registered, then the liquidator and other creditors will ignore it. I will explain to you in a story, only then you will understand. First, I will give you the basic provision. Then I will explain, and you'll see how dangerous it will be for the creditor if the charge is not registered. Before I continue, Form CHG 2 and 3 are not filed. They are like certificate of incorporation. Certificate. They will be issued by the registrar. See, what I've used there, issued. So you file the form. The registrar will issue the certificate. So it is a proof for you that the charge has been registered. It is like a receipt. You have to download it and keep it. It is not filed by the registrar. It means once they clear it, there will be some electronic flag which they will remove. Then automatically the certificate of registration will be generated and it will be sent to you by email and you will generate it. That is called issuing. Correct. Karma is basically consequence. Karma is basically consequence. Any action has a consequence. No action, good or bad, there is nothing which has no consequences. The only way you can have no consequences, either sit quiet, do nothing, or do everything in Yajna Bhava. Do everything in Yajna Bhava, there will be no consequences. Don't do for any, motivated by any desire. Do it in Yajna Bhava as a duty. Don't be attached. Automatically, there will be no consequence. But that is very difficult for you all. Don't go there. Time is here. Samay hai. When you come to that age, you will understand why you should be unattached, detached. Then no consequence. Otherwise, everything there's a... See, he was telling me to move on. I said, don't tell me to move on. All that is... I'm creating one more consequence. he will be getting angry with me. So that will be against me. It will become a karma. Like that, it will keep on going. The loop of consequences will keep on. That web I'm continuously caught. Okay. Anyway. So now let's come to this very interesting concept. What will consequence of non-registration? What happens now? The charge, this is the sentence used in the act. I will first read it. Then what is the meaning of it? I will tell you in the form of a story, you will understand. The charge will become void against the liquidator and other creditors of the company. What? Yeah. Why can't they make law a simple subject? Nah? Like accountancy, 2 plus 2 means 5. I'm sorry, 2 plus 2 is 4. Whatever. So some accountancy is so simple. Okay. Whereas here, charge will become void against the liquidator and other creditors of the company. What does it mean? I will tell you. Simple, sir. A Limited is a company. It has run well, etc., etc. Finally, it has gone into liquidation. Meaning what? Winding up. So, liquidator has been appointed. Let us say that I am the liquidator of A Limited. So, what I will do, my job is to sell all the assets. So, I have sold all the assets in it. I have collected the money and I am keeping it in the box, in the suitcase, all the currency, 2000 rupee notes and 500 rupee notes, ready. So, you are all the creditors. Means I called all the creditors. I am holding a final meeting of creditors at the Kalyana Mandapam. I hire a big Kalyana Mandapam, Chaudhary, and because huge crowd, so many creditors will be there. All of you come. Announcement, notice given to all the creditors. Come and prove your claim. Take your money, go. So all the creditors come, 100 creditors come, let us say. All of them are sitting in the hall. I am standing in the desk, money ready. Now I tell all of you, stand up. Now, all of you now form 2 queues, 2 rows. All the secured creditors on my left. All the secured creditors on my left. All the unsecured creditors on my right. Now I want you to imagine this scene. All the secured creditors on my left. That queue will be small or big. It will be very small queue, na? Bank, financial institution, 2 or 3 Marwadis. That's all. That will be the only, that group will be there. Am I correct? Whereas on the right-hand side, there will be a huge line, yeah? Am I correct? Right from depositors, the man who supplied brinjal, everybody will be standing in that queue. Am I correct? All the trade creditors, unsecured creditors, yeah, depositors, everybody. It's a huge, long, like the tail of Hanumanji, it will be going. Am I correct? Now, suddenly one creditor comes late. He comes rushing in and he comes to me. Yes, tell me what you want. I am a creditor. He says, I'm a creditor. So, yeah, you are a creditor. Tell me, are you a secured creditor or an unsecured creditor? Immediately he says, I'm a secured creditor. Agreed. Show me the proof. So he shows me registration of mortgage against the land. Mortgage has been registered. Registered mortgage is showing me against the land belonging to the company which I have sold. Now the point is I'm saying, Baba, you are secured creditor or not, I will decide. Now first I'm going to ask you a question. Is this charge registered under the Companies Act? Is this charge registered under the Companies Act? When I ask that gentleman, he keeps blinking. Companies Act, registration, kya hai? Mujhe nahi malum. Sorry, sir. This charge will become void against me, the liquidator, and the other creditors of the company. So as far as the liquidator and the creditors are concerned, this gentleman is not a secured creditor. Though mortgage has been registered, still, since the charge was not registered under the Companies Act and he does not have a certificate of registration, sorry, you are not a secured creditor. Please join the long queue. Please go to the unsecured creditors queue, stand in that queue. No, I am secured creditor. Sorry. So what is the consequence of non-registration of charge? The real consequence is the secured creditor will lose his security. That is why it's very, very powerful. Okay. But please note, he is not a secured creditor, but still the money is due to him. So this shall not prejudice any contract or obligation for the repayment of the money secured by a charge. Are you able to understand? So repayment of the money secured by the charge cannot be done. The repayment is due, but he loses security. He will have to join. When I say long queue, what I mean, unsecured creditors. So first I will pay all the secured creditors. Whatever has been sold, the securities, I will distribute it to them. Then if anything is left over, I will keep it in the box. Then I will call the unsecured creditors. Check them. If all their dues can be paid out of this. If so, no problem. You also come and take your money and go. No problem. But if this money is not enough, if the money remaining after paying secured creditor is not enough, then I will pay only portion. So if I owe you 1 rupee, I will pay you 60 paisa. Balance, the vertical lines go. Okay. So are you able to understand? A man who should have been a secured creditor, paid in full, or at least the value of the security would have come to him fully. That gentleman is now going to join the long queue. The charge has become void against the liquidator and other creditors of the company. So I have given my best explanation for this concept. Let us see how many of you have understood. Yeah, you got the point. He is doomed. Say, secured creditor is doomed. So this means the secured creditor whose charge is not registered loses his security and is reduced to the level of an unsecured creditor. See, the company cannot dispute the debt, but the creditor cannot enforce his security. He can only file a suit or join the long queue of unsecured creditors. So if you read this slide without me now, you will not understand what is this long queue of unsecured creditors. So with the video only you have to watch it. Because that long queue means, you understand now. So who is the real sufferer? The real sufferer is the charge holder. Are you able to understand? So you will immediately intelligently ask me, sir, what happens if the company simply does not file, sir? There is a penal liability. Non-filing of charge, non-registration of charge, in addition to this consequence, in addition to the consequence to the creditor, the company also is liable. The officers are liable for penalty. But the real sufferer is the charge holder. As rightly pointed out, the word has been used very beautifully. Surendranji says, no, not Surendran. Who said that? Manish Kumar. He is doomed. Beautiful word he is using. Doomed creditor. He is not a secured creditor. He is a doomed creditor. Okay. So the point is, so where the company fails to register the charge may be registered by the charge holder. So this is the facility given to the charge holder by the law. because the real sufferer is the charge holder now. So 78, next section, 77, 78. They say, look here. In case the company does not file, you don't wait, you file. Which is why all banks and institutions, NBFCs, they will not give that opportunity to the company. As part of the loan agreement, they will say, registration of charge with the registrar of companies will be done by us. Whatever cost we are incurring, we will charge to you. So they will have their own company secretary, a trusted company secretary, whose office will be entrusted with the work. So continuously they will be registering charges. So the secured creditor should not take the risk of allowing the company. But suppose the secured creditor says, okay, it's a big company like, say, Mahindra and Mahindra or Tata. They will not, the bank will say, hey, you are a big company. So the secretarial department will be there now. There will be one company secretary whose job only will be registration of charge. Continuously, he or she, day in and day out, that is one of their jobs. They will be only handling loan documentation and registration of charge. In fact, my daughter, she's a company secretary. Now she is married and settled in Coimbatore, working in a company as company secretary. Earlier, she was working in the company in Chennai, where she was reporting to the CFO. And one of her major work was this charge registration and syndicate. There used to be a syndicate of banks which was lending money to them. So she used to handle the banks, documentation, loan documentation, registration of charge, everything she was handling as part of her job, okay, in that company. So this is, sometimes the company will have its own people to do it. Usually company secretary will take care of it. That part of the job you and I need not. But if you are going to be the CFO or the chief finance guy, ensure that it is done. You call up the company secretary and ask, hello, Baba, have you filed charge? Hanji. Proof. Show me proof. Proof is a show. See, I'm trying to learn Hindi, not able to get. So show me the proof. And Dikha Tijiye, no, whatever. Show me the proof, like that. Correct. As Anusha Devnik says, that is why section 78 very clearly says, the charge holder should not only have an opportunity, he has the right to file. So if the charge holder sends it also, the registrar will file it. If so, whatever expense has been incurred by him, the charge holder can be recovered from the charge creator, the company. So they will be entitled to recover from the company the amount of any fees or additional fees or ad valorem fees. Don't worry. What is ad valorem fee? I will explain to you. Don't worry. Yes, take this word. Now it will be explained in detail in another 2 slides. It will be explained. Okay. So whatever expense is there, they can collect it. Right? Further, one more thing is there. If a company fails to register the charge, that cannot absolve, means release a company from its liability in respect of any offense under this chapter. So, if a company fails to register the charge, there will be consequences, penalty, punishment. So, the company and the officers will have to undergo that. Okay, so this is the consequence of non-registration, meaning 1, the secured creditor will lose his security. 2, the company will be suffering penalty. So because the real sufferer is the charge holder, the law gives him the right, as Anusha Devani says, the charge holder has not an opportunity, he has a right to file. Okay. So this is the provision for registration of charges, which we will see now. Procedure for registration of charge. Okay. What is the procedure we'll see today? First, the company must register the charging. So follow this blue line. The company must register the charge. If the company fails to do so within 30 days, so you have to register the charge within 30 days. If the company does not do it, then the charge holder may apply to the registrar. Now the charge holder is saying, I have given a loan, there is a charge. He will obviously give instrument creating the charge. If there is a hypothecation deed or mortgage deed, which is signed by the company, it will be filed. But in spite of that, unilaterally, on the only by the charge holder, if a document is coming, then the registrar will give notice to the company. So then if the company is not objecting, no objection, so the registrar will say, I give you time for say 15 days. If you have any objection, please send. No objection is received. Then the ROC will register within a period of 14 days after giving notice to the company. So after giving notice to the company, within 14 days, if no objection is received, the charge will be registered. If objection is received, maybe there is a dispute, maybe I don't know. If so, then the registrar will say, look here, yes, you are saying that maybe what could have happened now, the way that charge holder is filing, it is wrong. So the company will say the information given by him is wrong. Then the registrar will say, look here, you give me the correct one. So you register it yourself, or give me sufficient cause why the charge should not be registered. If sufficient cause is not shown by the company, then the charge will be registered. But if sufficient cause is shown, or if the company registered by itself, then matter over. Otherwise, if sufficient cause is shown, the registrar shall not allow registration. So this is the protection for the company. When the charge holder files, the company will be given an opportunity to object. If no objection is there, that's it, registered. But if objection is given, then it will not be allowed. If it is sufficient cause is given, then they will return the documents to the charge holder and say, please go to the company, get it clarified, come together briefly. Right. So both sides are protected. Both charge holder and the company are protected. Now, these are the time limits for registration of charge. Now, friends, charge created before 2/11/2018. See, this is the date on which the new provision came into operation. So 2/11/2018. So any charge created before 2/11/2018, that should be registered within 30 days of creation. If not registered in 30 days, then you have to register within 300 days of creation on payment of additional fees. So they are giving 300 days time for filing by paying additional fees. Okay. If it's not registered within 300 days, then they have to file within 6 months from 2/11/2018. Please note, 30 days of creation, then 300 days of creation. So for all that, you have to take creation. Please understand. Suppose the charge was created on 1/10/2018. Then 30 days, 1/10, so by 30th October, you have to file. Got it? Created before 2/11, now 30 days, not done. Then 300 days. So from 1/10, you count to 300 days. Yeah. If not registered within 300 days, then 6 months from 2/11/2018 is given to you with additional fees. Okay? A little bit higher fees. It will be pretty penal. The fees will be pretty high. So one thing I'll tell you, this part, it is there in the law, but not relevant because 2/11/2018, 300 days, 6 months, all over. Now they won't be such charges. So this is normal case. Charge created on or after 2/11/2018. This slide is very, very important. Please concentrate. With this, I'll be closing today. I'll be stopping here today. After the explanation, I will stop. In the next class, we'll continue with the balance portion. Okay. So charge created on or after 2/11/2018, right? You should register the charge within 30 days of creation. No problem. So after 2/11/2000, after 2/11. So any day after 2/11, if you are creating a charge today, then you have to, creating means what? You are taking a loan and you are registering the mortgage, charge created. You are taking a loan on a vehicle, hypothecation, charge. You are giving a jewelry as shares as a pledge, charge. The date of creation of the charge is to be taken. From that date, within 30 days of creation, you have to file. You are not registered. No problem. Another 30 days, register in next 30 days. See here, from the date of creation. No, here, another 30 days. So, first 30 days, not registered, another 30 days. That is totally 60 days from creation. But for the next 30 days, you have to file additional fees. So here you have to register with only normal fees. Up to 30 days, normal fees. Beyond 30 days, next to 30 days, 60 days, then additional fees. Further period of 60 days, meaning 30 plus 30, 60, 60 plus 60, 120 days from date of creation. Further period. So 60 days over. 63rd day you are filing. Up to 120, 60 days additionally you can take. But for that further period, you have to pay ad valorem fees. See, normally the fees payable to the registrar is based on the authorized capital. It is a fixed amount, like 1,000 rupees, 500 rupees, or if from so-and-so authorized capital to so-and-so, they give a fee like that. So it is based on a table. There is a separate rules are there. The rules give the form filing fees. To my knowledge, that is not there in your syllabus. You don't have to waste. You should know that fees are there. No, don't have to know what the fees is. Okay. The fees is usually a fixed amount based on the authorized capital. Whereas once you go beyond 60 days, up to 120 days, the fee will not be a fixed amount. It will be based on value. Suppose you are creating a charge for 20 crore, then it will be based on that 20 crore percentage of that. It will be ad valorem. Ad valorem means based on value. So all along it was a fixed amount. Suddenly the amount becomes huge. Okay, it becomes based on value. So whatever it is, you are given 120 days, 30 days normal, another 30, 60 with additional fees, then another 60 with ad valorem fees. If after 120 days also you have not done, what happens? We will see it later. Okay, when you don't, then you have to, it's a different story, more complicated. As of now, we have given you inputs like this. If you have any doubts, you can ask me up to here. Thing. Difference between lien market and pledge. Sir, when lien is basically the right to retain possession, sir. Whereas pledge is the right to sell is also there in pledge. So when merely lien is marked, it means that see today the word lien is used actually in a different sense. Today the word lien and pledge are being used as if they mean the same thing. Strictly speaking, lien is only right to retain possession, whereas pledge is a right. In case the loan is not repaid, the pledgee has the right to sell. Okay, lien does not give the right to sell. Subsequently, you have to exercise the right to sell. Lien is only right to retain possession. Okay, so possession will be in my control. I will retain possession. If you pay, I will release. If you don't pay, then I have to exercise my right to sell. Whereas pledge, automatically there is a right to sell. Nowadays, they use the word lien with the synonymous with right pledge. So pledge and lien seem to be used similarly. I'm not questioning it. That's the way it is. That's the way it is. Same time limit applies to both company and creditor. Absolutely. Okay, that is why they're saying first 30 days now. If the company fails to file within the first 30 days, then the charge holder himself can register. Nah. That's what they say. If you pay, if the charge holder pays any additional fees or ad valorem fees, got it, then that can be recovered from the charge company. Beautiful. With your permission, I will stop here today. Day after tomorrow, we will continue this topic and I'm sure finish it. Maybe some questions. Maybe time permits, I will also discuss the questions relating to what is the earlier topic, acceptance of deposits. If any questions are there, I will discuss that also. Okay. Good. Thank you very much. Bye. Sir, class is over, sir. As today, I'm just closing it here.